Is my mic on? I think my mic is on. Oh, wow. I look great. I look like I had a very restful week. What's up, everybody? Welcome back to another Magic Monday. Sorry I left you guys high and dry last week. I went home for Thanksgiving. I enjoyed my life. I had the longest break I have had from the charts in a very long time. Yes, Tunsky, I did just get back from the swamp. Say it's loud. It's too loud. Got the mic levels too loud. Okay, maybe I can tweak that. Sorry about that if that wasn't good. Yeah, I hope everybody's been doing well. It's been quite the couple of weeks out there, huh? Um, like I said, I just rolled in late last night. My flight got canceled out of Providence, so I had to drive straight to Boston, drop off a rental car, barely made it on the plane, and then it took me an hour to get a cab home from the airport, and then I kind of slept in because I've been freaking exhausted. I've been sleeping on couches basically for the last week. So um, good to be back. Good to be back. Always interesting going home with family. I have a very different life from everybody else. It's hard to have people understand how you made so much money trading fart coin last week. It's just not a thing people relate to. Um, okay, let's get back into things. Like I said, it's gonna be a little disorganized today. Haven't had a chance to gather a ton of thoughts, so we're doing this live, Bill O'Reilly style today. Um, I think when we last left off, I was delivering a potential hopium message for the altcoin people out there. A prophecy which I would say was partially fulfilled for those of us who participated in the great fartening last week. But the idea was basically that altcoins look pretty good to me on a relative basis to BTC. And I maintain that they actually still kind of do. Like right here, I've got the ratio of total 3 to Bitcoin. This is the ratio of all the non-Bitcoin, non-ETH coins minus the stable coins to Bitcoin. And honestly, this chart doesn't look that bad. It looks like it's kind of, just consolidating in this kind of zone of origin here, and there's no longer these kind of nasty moves down. It's kind of chilling a little bit. So I would say that whenever Bitcoin stops dying, there's probably going to be a pretty good altcoin party, right? The problem is that Bitcoin is dying. It's dying a very not that slow and painful death at the moment. So although this ratio might stay the same, if altcoins go up 2% versus Bitcoin, but Bitcoin goes down 40%, that doesn't help the dollars in your bank account, right? It's a no bueno thing. Oh no. Are we back? We're back. Yeah, sorry guys. This mic has the worst mute button in the history of mics. Like the worst ever. It's like this if I breathe on it, it it goes. I think it's back now. Yeah, we're back now. All right. So If I blow on the mic too hard, it mutes. It's like I hate it. Do not buy this mic. Anyway, I don't know where it cut off, so I'm sorry. The TLDR of that was basically like I wanted to be long alts. Alts look good versus Bitcoin, but I needed Bitcoin to stop dying. But I was also worried that stocks would potentially die. Ergo, Bitcoin would die more, and then everything is dead. Crypto sucks. It's just like a bad place to be, right? So let me take you back to the week prior to Thanksgiving, right? We had Nvidia earnings, and Nvidia smashed earnings, just absolutely trucked earnings. Stock was up bigly after hours. We were all celebrating in the streets. Where was Nvidia? Nvidia earnings, yes. So right here, right? So Nvidia earnings were good. I was pretty bulled up because I thought stocks were kind of hanging on a cliff a little bit, waiting to see what Nvidia did. Nvidia obviously is a huge chunk of the stock market. It's now, I think, bigger than the entire size of the German economy. Sorry, Germans. So a lot riding on Nvidia, and what ended up happening, uh, the morning after earnings was, we had a little opening day gap here, right? So we gap up post earnings, we pull back a little bit, everything's fine. We get in here, right around here, and I'm in the Discord, and I'm just like, oh shit. This is bad. Bad things are about to happen. So we start closing some candles below the mid-range of this gap, and I turned into a panicking, right? I just said, just sell everything, hedge everything. And I sold all the Nvidia that I bought. I bought Nasdaq shorts. I bought some S&P puts. Like I just was just like, I gotta get the F out of Dodge right now because, generally speaking, what you don't want to see, markets tend to bottom on bad news and top on good news. That's how it works, right? So when you see a company have like the greatest earnings call in the history of earnings calls, right? And then the stock gaps up the next day, and then like an hour later is like trading below where it was pre-earnings, that's a bad sign, right? So the thought at that point was like, oh my God, Nvidia is going to dump. If Nvidia dumps, the stock indexes are going to dump. If the stock index is going dump, then like I guess Bitcoin is going to go negative because it's already doing pretty well right now, pretty bad right now, while stocks are doing well. So that was no bueno. What happened next in stocks though was like kind of interesting, and I am at a point now where I would say I'm neutral stocks now because there's some interesting dynamics going on in the stock market, right? So if you just look at the indexes, right? If you just look at say Nasdaq and what happened with the monthly candle, this could have been a very bad monthly candle at one point because at one point this was your October low and we were trading here below the October low, right? And if that happens, you get like a bearish monthly engulfing candle, and that is a bad sign, right? It's a sign that you're about to have a bad time. But Thanksgiving week, we had quite the little up-only price action. Now, do I put a ton of weight onto this? No, because it's a weird, like half holiday week, low liquidity, end of month, like. And now we're heading into December, which in and of itself is kind of like a weird month. Everybody hedges, they take profits, they lock in their gains for the year, they go off on the holidays. Kind of a lower liquidity environment. You still have like the structured flows coming in from the retirement funds and all that jazz. So stuff kind of gets bid up and you get your Santa Claus rally. So I'm not really bearish stocks for December, but I also don't necessarily think that a bullish December is going to be like, oh, it's all fine. We're good. We're going higher, right? So I would say I'm neutral. From like a market structure perspective here, like I still kind of view this as the sort of last protected high. Um, there are some red flags here on the NASDAQ chart that I pointed out, right? Like this is basically a bearish divergence on the 3-day chart, which to be fair has now potentially resolved itself. So sometimes these divergences end up with just a retest of the 50 kind of back in the trend, and then we resume the uptrend, right? So that's a very real possibility here. A very real possibility here. So no strong convictions one way or another at this point with like stock indexes in general. Now, Nvidia, I think, is interesting because it's telling a bit of a different story, right? Nvidia did put in what I would consider to be quite a bad monthly candle. Like this is a bit of a red flag to me. A bit of a warning shot here. We did end up closing as a sweep, so point for the bulls. But like this is obviously like a pretty bearish momentum candle. So there's this question in my mind now of whether we're going to kind of trade back into this zone here towards like kind of the tariff loans, the tariff flows, and that may just entail us kind of going down to here. It may entail us going all the way back down to this order block here, or this just gets invalidated, right? And then we close above here, right? And if we close a monthly back above this candle, that's really bullish in my mind, because then you're basically thinking like, oh, I'm just going to go turbo long and place a stop below that November candle. That's going to be my new invalidation for a trade, and I'm just going to take this whole thing up, right? So this is sort of where I'm at right now. Neutral stocks in general, leaning bearish Nvidia, wanting to buy somewhere in here on Nvidia, alternatively waiting probably until next year for some sort of close back above here, and then looking to kind of get really long again. Maybe not on Nvidia in particular, because I do think other stuff looks better now. But just as kind of like a general market-wide sign that we might be okay. The really interesting shift that's taken place in the market is that Nvidia is no longer the golden child. The golden child of the market is now Google. And one of the best things I did this year was sell a balls ton of crypto in September and October and buy Google with it. And Google is this is for those of you who are in crypto and don't know what a good chart looks like. This is what a good chart looks like. See how it goes up? See, up, 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 up. See all those green candles? This is what we're supposed to be buying. I know this is a foreign concept to a lot of us, but anyway, even though Nvidia has kind of been like shaky, and I think looks a bit bearish at the moment, I think one of the reasons that the market hasn't tanked is because a lot of the flow shifted to Google, and Google is now kind of carrying things. There's obviously been like a bit of a downfall, if you will, with SAM and OpenAI. OpenAI looks kind of cooked, to be honest. But that's not really bearish the stock market, to be honest, because like that's really bullish for Google, I think. Gemini really had a generational bottom with Black George Washington, and it's that was basically the buy signal, right? The Black George Washington was the FTX of Google, and now like the model can do no wrong. It's basically just been crushing. Nano Banana has been sick. Google's got like all of this kind of proprietary training data, all this vertical integration that OpenAI doesn't have. It's just like a great looking stock right now. It looks so good. So one of the things I've been telling people who are like, oh, I have so much crypto. Do I sell it now? Like, what do I do? I'm down so much. Like, you don't have to sell your crypto and sit in cash. You can sell your crypto and just buy something else, right? And yeah, if you sell the bottom of crypto and it starts ripping, but you bought Google with it, like Google's probably doing well as well. And like honestly, 20 years from now, you're probably still going to look back and say like, "Oh, thank God I sold whatever that stupid coin was and bought Google because Google's a real company is good." Good things there. And if we look at kind of the Google NVIDIA ratio, which over time has been basically just like a one-way bloodbath in favor of NVIDIA, right? Lately, if we zoom and enhance, there's been a marked change here in the trend. So I kind of view this is sort of like our recent range, and put in a low little deviation, another little deviation back inside the range, overside retest of the range, boom, big move up. So I think this is going, at least another 30% Google versus NVIDIA. Like if I were to pair trade that, in reality, I think it's going up here. This is another 90% to the top of the range. So we are, in conclusion with this chart, basically saying in a longer term portfolio, like if I were to buy things and weight them, like I would be overweight Google and then like underweight NVIDIA right now. And if I were trading, right, I would be entirely focused on the long side for Google, and I might be even like hedging to the downside with NVIDIA, which I think is kind of an interesting play right now. So PD Marks, you're saying, can we differentiate between blue chip long-term holds and crypto and everything else? I don't know what a blue chip long-term hold in crypto is, honestly. I don't even know that Bitcoin is a blue chip long-term hold. Like I suspect it will be. But like there is like incredible weakness in the Bitcoin chart right now. And it's been very interesting to me that weakness in the Bitcoin chart has also been paired with strength in stuff like Zcash, which now looks kind of terrible. Monero, right? So I kind of like wonder, like, is this noise, right? Let's see if I can pull up the XMR. Oh wait, that's XMR market cap. Let's pull up the Monero Bitcoin chart, see what that looks like. I wonder, is this noise? Is this like a kind of standard little crypto exit pump? Oh, this is like an area of the market, it gets hot, it pumps, everybody chases it, and then it dumps to zero? Or is there like something real happening here? Like is there something that the market realizes, thinks about Bitcoin that maybe you and I aren't thinking about yet, right? And it's being reflected in the charts. I mean, this is a kind of an interesting, this is a pretty bullish chart, in my opinion. This is Monero versus Bitcoin. I think that like if you are holding Bitcoin for the long run, like I think you have to hedge part of that portfolio. Like I think if you have like 100K of Bitcoin or something, right? I think you have to convert like at least like 5 or 10% of that into some basket of like Monero, Zcash. Because I just in case there is something real happening there, right? If you could think of it as like a little insurance policy. Because Monero versus Bitcoin looks good. And Monero versus the Nasdaq looks fine, right? But if we, so I made a video a couple weeks ago on this channel titled BTC GTFO signal, for those of you who didn't see it, and ended up being a pretty good signal, because the idea was basically like, once we lost this low, it was over, like, and it would be over potentially very quickly. And it was it was a swift move after we lost that low. I mean, you basically just kind of relentlessly went down only. So you can see we just got a little underside retest of the level, and then whew, and now just another reverse God candle. And I've talked about this chart a lot. I've been talking about this chart for a while. It was kind of the main catalyst between for me getting out of a lot of crypto like a few months ago, before even like 1010 happened. Because when you're investing, when you're thinking about where do I park assets for like multiple years, you want one asset to either be outperforming another asset, or to have like a role in the portfolio that sort of like insulates you from different market environments, right? Like maybe it performs better in like a bear market, right? When it comes to the Nasdaq, Bitcoin is basically just sort of one-to-one correlated with it, as far as I'm concerned. So if it's not outperforming the Nasdaq, especially to the upside, why are you holding it, or why are you overweight it, right? And my worry on Bitcoin, right? Like if I zoom out, I had an interesting moment this Thanksgiving, because I was talking to some normies, right? Some girls actually who were like very interested in crypto, and they were like telling me about Raw Paul in the banana zone, and I was like, oh God. I'm like, oh no, has the banana zone reached like normie mainstream? Um, and they're just talking about Bitcoin, like it's gonna go to 1 million, it's gonna go up. Of course, it's going to do these things because Raw Paul and the banana zone. And if I were to like bear case this and like bear hole you, everything we have ever wanted to happen with Bitcoin pretty much just happened, right? We got an ETF. We got people in Congress who were pro Bitcoin attempting to pass pro Bitcoin legislation. We got a Bitcoin president who talked about a strategic reserve. Nation states bought Bitcoin. The US government said they're not going to sell their Bitcoin. We had a guy from the .com bust turn into some crazy dude and mortgage everything on earth to buy Bitcoin. And the end result of all of that, the end result of everything happening to Bitcoin that we ever wanted to happen, was that Bitcoin over the last year put in what looks to me to be like a pretty nasty deviation on the Bitcoin Nasdaq ratio. And again, like let's go back to what I was saying earlier about markets topping on good news. This is like high time frame good news, right? This is good news. Like this is like a high time frame chart. There's multiple good news, like all the good news you could ever want on Bitcoin. Like I don't know what more you think that like we're gonna get as far as like Bitcoin good news goes, right? I feel like all the good news on Bitcoin has basically happened, and I don't know what the next thing to look forward to is. And now I look to some of the bad, like there are gray swan catalysts, right? We've got the whole quantum computer thing, and maybe something else that I know everybody says, oh, it's not a big deal. It's not a big deal. We can fix that. Is that true? I don't know. I'm not smart enough to know that. But I do know that it's like a negative narrative that hasn't really fully panic hit the timeline yet. And I know that we've run out of the good narratives, and the good narratives have not only not propelled us like far beyond prior all-time highs versus the Nasdaq, we've got this nasty swing fail. And look at this. Look at this momentum. If this were a normal chart of like anything else, right? I would be saying like, okay, well, you deviate the top of the range, so it's very possible that we come back down here and deviate the range lows, right? And if this were a normal chart and you didn't have your Bitcoin bias, right? You're like Bitcoin bull goggles on, you'd just say like, oh, well, that's interesting. We've got some very interesting demand here under this range. And you could like make a case that this is sort of like a gigantic accumulation range, right? Maybe it does something like this, and then it goes like this and back inside and then all the way up. And over a very long time frame, that just looks like a giant accumulation back. But that giant accumulation range for you might be like half of your adult life, and you bought it at the top, and then you had to go through the right. Like how bad is this of a drawdown, right? From top to bottom here to 80% drawdown, right? So imagine you're the guy who's like, I'm gonna go 60% Bitcoin, I'm gonna go 80% Bitcoin, 20% stocks, because Bitcoin's going to 1 million, and I've got all the time in the world to sit this out, right? To wait this out. And it ends up being that you bought like a generational, like intermediate top in like Bitcoin hype and sentiment on a relative basis to the Nasdaq, right? An asset which is creating like robotics and AI and incredible breakthroughs in biotech, and like the sky is still the limit there, right? But in Bitcoin land, we did all the things that we wanted to do. We failed to break out, and now we're going in the wrong direction. And now you you envision what happens next year. The Republicans get shellacked in the midterms because, like, honestly, like I feel like I've had a very good record of calling things politically over the last like 10 years. I called Trump over Hillary. I said Trump at 2-1 to win the Republican nomination a couple of years ago. It was like the easiest bet in the history of histories. I called him winning last year. Went all in on everything before the election during match. Like I feel like I have a good ear to the ground on this. I think Republicans get shellacked next midterm, right? I think Trump has turned crypto into a like a red thing, and the blue people don't like things that are red. And I think that when the Republicans get shellacked in the midterms, it's going to be like very obvious that the market's going to price that they're probably going to get shellacked in the presidential election. I think we could go as far to the left as like an AOC. You think AOC is going to be like pro Bitcoin? No, probably not. So I do see a scenario where we enter an internet bubble-esque like dark ages for Bitcoin. Like imagine like 4 to 12 years of like sideways or chopped down. That is a possibility, right? I need people to understand that that is a possibility. I think it's a relatively high possibility, honestly. And I think the solution to that is not to sell all of your Bitcoin, but I know that a lot of you out there have been like lulled to sleep by nearly 2 decades of just up only price action. And every time it goes down 98%, it goes way back up and way higher, and it does it over and over again. And so everybody's brain in Bitcoin land is just conditioned to think like, oh, well, yeah, Bitcoin goes down, but then it goes back up. Right? It doesn't have to be that way, right? Financial cycles are they're a long time. They take a long time to play out, right? Like if I take the S&P 500, right, the gold standard for buying things, right? Look at this. How long did this take? That was like 2,700 days. That's like 8 years. and then you go to the top again and then die, right? And then it's not till here, like 12 years later, that you're back up, right? And then if I go back to the 50s or something, how far back does this go? Like, look at this. Like, is that what we're doing right now? It looks kind of similar. Similar vibes there. We didn't quite tap that, but like it's a big chop range, huge move up, swing fail the range high, and then what does price do? It comes all the way back down, takes out the range low, kind of front runs this demand, but there's like a little demand here like there is on Bitcoin. Then we go back inside, then we're up. But if you bought here, it was about 8 years until you were back in the green. Actually, no, because it almost went back and then it went down again. So it actually took, yeah, 2,900 days. Do the math on that, right? So these things happen, even though these markets just go up, 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 up over time. Again, not trying to be a full panicking, not trying to make some video that just looks really fucking stupid in like 2 years because Bitcoin's 300K and everybody's like, look at this guy. I see denial in the chat. Cade Bruce, you don't think this can happen? You don't think this can happen? This can happen. This can absolutely happen. There are signs that the market does not like Bitcoin, and it does not like Bitcoin versus other assets. It does not like Bitcoin on high time frame charts. The full brunt of this move down here is about 67%. Another 67% if this plays out that stock fractal and takes out the range low versus NASDAQ, right? So if you are not comfortable having like 80% of your net worth in Bitcoin and then enduring like a 70% drawdown versus stocks while everybody else makes money in AI over the next decade, again, I'm not saying sell all your Bitcoin. I'm saying don't be stupid with your allocation. Don't be stupid with your weightings. There's absolutely no reason why this thing has to keep going up in the same exact way it's gone up for the last 17 years. It's absolutely no reason. And you get a lot of trouble in finance and investing thinking that the future is going to be like the past. Because it's usually not. It's usually not. It's just enough so to trick people into seeing a pattern and then like getting too into a thing and then boom, it goes against them. The model breaks down. You remember the Bitcoin money supply thing? Oh my God, we couldn't stop talking about that chart. It was like 1-to-1 correlation. It looks so good. And then it's just gone. It just stops working. It was a perfect chart. They're like, oh my God, we can predict the future so easily. We're just gonna buy all this Bitcoin in the spring, and then it's gonna go back to 200K, and it broke. The correlation's gone. That's what happens. PD Marks, pre-2019 didn't have quite the same level of inflation happening to USD. Yeah, look, I think Bitcoin can still go up nominally versus the dollar, right? But if you want to make it in modern society, like you can't be a nominal guy, right? We all live in an era of basically like, I don't know, like maybe pre-hyperinflation. We live in an era of inflation. I don't know if you guys know Mike Green, Professor Plum. He wrote a very, very cool piece that I think everybody should read. It's pretty eye-opening for me. Let me see if I've got it here. And this article was sort of disputed by economists, and no, it's not really this way. Yeah, here it is. So this is a really cool read. I think you guys should read it. It's on yesIgiveafig.com, which is kind of a boomer name for a blog, but you know, whatever. But the TLDR of this is that Mike Green, who you've probably seen going against like Pompliano in past interviews as like a Bitcoin skeptic. Honestly, I think Mike Green in those interviews like is aging pretty well. Um, and so like I like to give a lot of credence to how he thinks and what he says. I didn't know this. Apparently, the poverty line was created. I think the modern poverty line is like 31K. It was created with the idea that you need like three times like the amount of food budget, right? And the food budget was like a third of what people spent back in the day, right? That's like where the poverty line is, right? And the modern world isn't like that. Food is way freaking cheaper, and now like people have expenses that didn't exist before, like healthcare and daycare, childcare, which is like the biggest expense for people with kids who are now forced to work two jobs. But if you work two jobs, you have to pay for childcare. So it's like this thing that's like fucking everybody up. And basically, we have this kind of social safety net system that is designed as if like it needs to help people who make 30K a year, right? The problem is Mike Green in this article concludes that the modern poverty line for a family is actually 140K a year. And the implications of this are scary because we basically have like a welfare system that helps you like when you're in 30K, 40K income, right? But then once you jump out of that, it starts punishing you. So like every time you go above 40K, you make more money, you get less money from the government, right? And then it creates this freaking vacuum that just sucks you back down because you can't get from 50K to 150K because like every incremental dollar you make, the government takes dollars away from you because it thinks you're not poor, even though you are poor, right? So we are all swimming around in this like vortex right now that we're trying to escape, right? This inflation vortex. So we have to invest in things that are beating inflation. Like we can't look at the dollar value of things. We have to look at like the real value of things, the value of things versus the money supply, right? And the reason to take this all back that like Bitcoin NASDAQ is a good thing to look at is because like the NASDAQ is like one of the best sort of things that factors in money printing, earnings, all of this stuff, right? We want to invest on kind of like a relative basis. We don't want to be buying Bitcoin if it's not beating the NASDAQ, right? Because not only will it not beat the NASDAQ, it has like worse volatility, it has worse drawdowns, it has all these negative side effects for our portfolio. All right. So sorry, that was a bit of a rant there, but this is what I think about when I'm trying to think, what do I buy for the long term? Like, how do I beat the inflation? How do I beat the money printing? Like I can't I can't just buy the S&P. I think like buying the S&P is like a break even endeavor. Like if we're trying to get rich and escape things, I think we have to figure out what is really beating the house in terms of inflation and money printing, and we have to also take advantage of other tricks, right? Like if the government is going to be like giving people free money or subsidizing debt, like I think we have to take on debt to like buy more stuff that's going to go up. I think we have to intelligently use debt. Like we have to borrow money on 50-year mortgages to buy houses. Like if the government's going to subsidize that and then suppress like the long-term interest rate, that's good for us buying those assets, right? Like somebody else is paying for our stuff in a way, which is a very different mentality than people have always had, I think, to debt. It's definitely a different mentality than the boomers have, but like that's how I think about things. Marty, what's the number in that big yellow box? Well, the number is tricky because I don't have a significant decimal places here, but I can tell you it's a 66% drawdown to get to the box. Right? So we can see what these numbers would look like on the Bitcoin chart. So 61% to the range lows. What if the NASDAQ goes sideways effectively and Bitcoin goes down 61%? What does that look like? 61% is right about here. 66%. Like, this looks pretty reasonable to me. Looks pretty reasonable to me. I had pointed out in the Discord in my early kind of, I'm feeling kind of iffy about things back in October. one of the things I had pointed out is that there's sort of like a mega sort of deviation going on, or bearish divergence going on here. So you've got three lower highs here, and then within this third high, you also have some additional bearish divergence there and there, right? So there's undoubtedly, in my opinion, like a significant loss of momentum on the monthly time frame, meaning this entire leg up is basically in danger of retracing back below its equilibrium, wherever the 50 is, and trying to find some sort of bottom. And in an ideal world, right, this low holds, this whole thing becomes just a giant high time frame order block. It's a higher low, and we go back up in USD terms. But again, the question is like, is it better to be buying this than the NASDAQ? But like, this is not like a crazy, it's not crazy for us to go to like 30K. That's not like a unthinkable outcome for me right now. I don't think we're definitely going to go there, but like I am mentally prepared for us to go there. As for where I think we definitely are going, the next step, I don't want to say for sure, but like with very high probability, for me is somewhere around like low 70s, somewhere in this demand. This is an interesting area because it's got, you know, the prior range high right there. You've got this area of demand that gave this whole move up that never came back and was tested. So probably going to be a very strong reaction from that area. I suspect, you know, maybe we go down there. We could do something like that, right? And then end up putting in like a head and shoulders. This move would be nasty. People are going to be panicking here. Then we go there. Then we rip like 45%, and everybody's like, "Oh my God, we're so back." But then we make this move down. Then the next target probably becomes this 49K low and this demand here that was left behind back during the ETF launch. So prime target. And also just like the mid-range of this entire area here. So 42K-ish, pretty big level. We could hold there. We could hold there. Or we could kind of come back all the way down here at 25, 30. Anything's possible. The Sailor is now basically saying there are circumstances where he will sell Bitcoin. This is sort of the first line of defense for MicroStrategy. Will it stop here? It's possible we get some relief in here. I don't see this bleeding stopping here, right? So again, this could end up just being kind of like a weak ass head and shoulders kind of thing. I wouldn't be surprised to see MSTR come all the way back down like $20 or something. Could get pretty ugly. Again, not saying this definitely will happen. I just think a lot of people don't even have it in their head that these things are possibilities, and I'm trying to orient people around the fact that these are possibilities so that you can do probabilistic investing, right? Your portfolio should be allocated considering there's like a 10 to 20% chance that this happens, right? And that you don't like blow yourself up entirely, given that that is a possibility, right? Boyce Bingham, are you still shorting the S&P? I am still hedged. Okay, so currently I have a couple of hedges on stocks. So I'm basically, that's not what I want. There we go. I basically have a bear put spread on S&P right now. So I think I sold, what did I sell? I think I sold like 65 and bought uh, 61 as far as puts go. So that would be like right around, yeah. So if we come down below here, like all this is profit zone, and this is kind of like my max profit. Basically just size this to just hedge out like, 40-50% of my holdings. There's a pretty good chance I end up just taking this off, but I don't want to do it yet. I don't want to do it yet. I am still taking like kind of like a wait and see approach here. Certainly not until like if we start closing weeklies above like 69, nice. Probably wrong. And like I said, I think this monthly candle is neutral bullish. Like I wouldn't say this is necessarily a bearish monthly candle, because you came down here into this monthly fair value gap and you got about as good of a reaction as you could have gotten. The only better reaction you could have gotten would be to have closed this bullish, but like it's kind of a bullish candle. So it's not going to surprise me if price kind of makes some sort of pullback off the monthly open, some higher low, and then does that. Like I'm going to be 0% surprised on that. So I'm kind of looking to potentially get out of that. I would say that my conviction in the S&P short is much lower after last week than it was when I initially put it on, because last week was like a month-end holiday week. I just feel a little sus about the price action. I don't have like the same certainty that I had when I initially put the trade on, but it's still there. I don't want to be that guy who just takes it off and then it dumps. I also have a hedge currently on NVIDIA, which I feel a little better about. I have to look up the exact options trade I have on, but I'm basically like max profiting down here, and anything below here, I'm making money. If I were to hedge a portfolio today, like literally today, I would probably do it just with NVIDIA and not with the index futures or options. So like it feels like at a high level, like the best way to kind of play the market is basically with kind of like is effectively like long Google and short NVIDIA. And I think that kind of gets you what you want in stocks right now. Give me a sec. Just reading the chat here real quick. See if anybody's got anything here. No, I think we're good. Okay. Let's go back to crypto for a bit. So this is our altcoin. Yeah, this is a mess. Let's make that not a mess. This is basically our non-ETH altcoin market cap here. Let's zoom out to our yearly candles. There's a lot of stuff on the yearly candles that worries me, and that's at a lot of the root of kind of like some of this doomerish stuff you guys are hearing that extends out years, because yearly candles take a long time to play out. And one of the things you guys have to understand about trading is that like price is fractal. And what I mean by that is the interactions and things we use for TA, price action analysis, on like the 1-minute chart are just as valid with 12-month candles, right? Like there's nothing inherently special about 12-month candles that makes them immune to the principles that govern, lower time frame ranges. And that's what a candle is, right? It's a range. It's an open, a low, a high, and a close. And everything in trading is just like understanding how ranges interact, because a range is sort of like a spread of where buyers and sellers are kind of determining value to be in a particular market. It has like an equilibrium point, where most of the value is traded. It has the high, the low, the extremes, right? And price is generally range bound until it's not finding buyers or sellers here, at which point it starts going outside the range to find some sort of new equilibrium. This is how price expands. Eventually it consolidates again. All right. When price fails to go outside of a range, it's sort of like a failed auction. It tends to go back inside the range, back to at least equilibrium, oftentimes to the other side of the range to find buyers or sellers again at the extremes, right? And when price successfully auctions outside of a range, holds outside of a range, it tends to keep going in that direction until it finds a new equilibrium, and then a new range is established. This is just how price works, how trading works at kind of like a very a base level, right? So there's kind of like two main, there's a few main candles here, right? So when you're talking about altcoins, this is your January 18th bear market. This is like a 1-year order block. This is like the root of a lot of the OG altcoin demand here, right? We also had this 2021 candle, which was the glorious expansion candle, the good times that we were all so anchored to and seeking to. Yes, Alex Tan, I will chart ETH. Don't worry, I'll get that next. The good times that we are trying to relive. We're like the aging high school quarterback talking about his glory days all the time. And then the other major candle was the reaction after the 2021 bear, which is this bull, which is this mega bearish expansion candle. These were bad times, right? So when I look at this, what's interesting to me is the low of this candle, 170.47 billion. The low of this candle, 171 billion. So the low of this candle is still chilling here, right? We had this huge expansion move, left the low behind, and then we went back up. And then you can see basically we swept this range high, and now we're going to once again fail above the range high and put in all probability, a pretty bearish, I would say, yearly candle, right? And from just sort of basic principles of candle science and range, right? I basically see this expansion candle with a low untapped. We've failed to close outside this range. We now have a candle that's moving back towards the other side of this range. This, to me, looks like a pretty obvious target, right? And then again, we have this yearly order block here. If we kind of zoom in a little bit on the monthly chart and ask, like, does this make sense? It does make a lot of sense to me, because this is basically one top, two tops, looks like a double top, right? We've got the double top, lower time frame within the double top. None of that looks good. Basic principles of double tops, double bottoms. A double top tends to take the low that failed to make the high, right? So the most obvious one is like this low is toast, in my opinion, with like very high degree of certainty, this 312 billion. But in reality, I think all of this down here could be liquidated, right? Because this whole thing sort of failed to put in a new high. So I think you could see something like this, right, in altcoins, which would be very nasty. Like you're talking about a lot of altcoins going back to 2019 levels, and that basically just makes this an echo bubble, not a bull market. It's just an echo bubble. And that kind of fits in pretty well with everything you've all been feeling, with everything like that. Not a bull market. Not a bull market. This whole thing is just a bounce. And we still have to come in and put in the double bottom, the second low, and then we can go up. That's kind of my baseline assumption for alts in general, right? This is total 3. It excludes ETH, but if I look at the ETH chart, like I'm I've been pretty bearish ETH for a while at this point. I haven't been a turbo ETH bear. Like, I caught almost this entire move with multiple trades and got the fuck out before this thing dumped around 4K. So I'm willing to be bullish on ETH. Used to own a lot of ETH. I don't anymore. And the reason I don't is, again, let's go to the yearly candles on ETH. This is like really nasty. This is really nasty because we swept out this yearly high, and we're gonna put in. Who knows how low this closes? I would be very surprised if this yearly closes bullish. If we end up closing the yearly above like 3,400 or so, I might think differently depending on some of the lower time frame context. But if the year were to close right now, like, I would say to you, similar things here, right? You've got the bearish expansion candle from the 22 bear, right? Sweep and fail to close outside the range while also sweeping the outside candle. I would be like really surprised if ETH doesn't hit 879 in the next couple of years. I don't know how long like this could take. We could get a consolidation for like a year or two, and then maybe it like sweeps it like a few years from now, goes up. So the timing to me is not super set in stone. But I just like wouldn't be buying, and I don't want to buy any long-term spot ETH here. Like, if I have like a 10-year investment horizon, like, I'm probably just going to wait until this goes sub 900. I think in reality, we're probably going to take out this low here at 715. And if I kind of zoom in a little bit, right? This is sort of like our last kind of high time frame origin of demand, right? This is from the peak of the 2017 bubble to the to the depths of the bear. I just view all of this at I did think we were going to break out and hold above this range and go. I did think that. But when like the lower time frame price action starts showing you that that's not going to happen, then you start thinking about, okay, if the weekly is looking bad, that means the next month's going to look bad, which means the year is going to look bad. If the yearly candle looks bad, then that means this is probably going to happen in the coming years. And then you kind of update your priors and you change your thesis, right? There is like a pretty interesting little candle here. So like, it wouldn't shock me if we bounced here, even had like a big bounce. Like, something like this wouldn't surprise me if we go all the way back to like 4K or something and then go down here. And I know that's basically what this coin has been doing, right? It's basically just been yo-yoing between these crazy levels, making people think it's breaking out, but it's just range bound, right? I just view this entire thing here as just like kind of a giant consolidation above this demand, right? And it's interesting to note that the midpoint of this demand is right around the low of that yearly candle, like 715. And then the lowest kind of decent order block I can find is down here on the monthly, the mid-range of which is right around 420. So it's got some good meme value. So I don't know exactly where this is going to bottom. I feel pretty confident it's going sub 900. I feel pretty good about it going into the sevens, sub 700 maybe. And I see a possibility of like a four handle on ETH in coming years. Like I do. Um, if we start doing something that invalidates some of the other stuff I'm talking about, then yeah, okay, maybe I'll consider like that we can get long here and take it up again. But like I just I don't see that right now. It doesn't look like a fat pitch, if nothing else. And like I was saying with like Bitcoin versus the Nasdaq, there's just no reason to be like buying these things or buying them in any sort of like overweight um, percentage of your portfolio. Like if they're not going to outperform and outperform by enough to justify all the volatility. And this is nasty because this means like you could still eat another 83% even from here. Even from here. Like that's kind of like the worst case scenario I'm looking at. So if we get to sub 700, 400 ETH a couple years from now or 3 years from now, I don't know how long this takes. And everybody's like really grave dancing and it's basically turned into, $7 Solana or something, then I think it starts looking really, really interesting. I still think ETH is really, really cool technology. I'm still a pretty big believer in it, to be honest. It's just like Warren Buffett said, there are good stocks and bad prices and bad stocks and good prices. I think ETH is like a good coin with a bad price. And I think it was interesting to play the breakout trade here because this breakout definitely could have happened. There was like no obvious reason why this breakout was going to fail. Only the signs afterward that it had, right? So no regrets about trading this whole thing up, but it is what it is now. And it's just a question you should be asking yourself. Like, do I want to own this instead of Google? Do I want to own this instead of Tesla? Do I want to own this instead of some like an interesting little basket of biotech stocks, energy, all these things that are definitely happening that the government is definitely supporting because they probably don't have a choice. Even if it is like a blue administration, I think you're still going to see the government ultimately supporting AI. I think the AI people have all the money and are going to continue having more and more and more and more of the money in society. Those people are going to keep picking the politicians. I think they're going to still kind of be the oligarchs in charge of things. I just don't think you're going to see AI go away. Cade Bruce, wasn't the entire price action of 2024 a sign this wasn't going to break out? No, actually, I actually thought this was like good price action for a breakout, right? Because 2024 to me, I saw this as like a accumulation, manipulation, and then expansion, right? So this looked kind of normal to me, right? And this is the reason why I went long here, is because once we kind of got back inside here around like 2100 or so, with this like big momentum candle, like this is a model that I trade. Like this is the most frequent model that I trade, right? Like we talk about how price is like range bound most of the time. It's mostly consolidating. But one of the principles of price action is that when you have a range and price is consolidating, it usually will fake out of the opposite side of the range at some point before then expanding in the opposite direction. You have a failed auction outside of the range. In the opposite direction, price wants to move, and then it goes in the reverse direction, right? And then you get buy stops from the people who short down here, thinking that this is going to be a bearish retest and go lower, and then those people's buy stops fuel price out of the range. It brings in momentum traders. They bring price higher. This is like kind of how expansion happens, right? So this to me was a model that easily could have taken us towards 10K, just with the way I sort of like measure these things. Um, but I think it just wanted to go to the range high. It's just more chop, right? And this entire dump down to 700, even though it looks nasty from 400, 4,800 to 700, if you zoom out, it's just chop actually. It's one side of the range to the other side of the range, maybe back here, maybe back here, maybe back here. Who knows how long that goes, but it's just chop. Like lower time frame expansion, if you zoom out, is often just or usually just high time frame range bound price action. And then trading becomes a question of like what time frame are you framing everything around. Some people frame things around minute time frames, some people frame things around weekly. If you're investing, and I do a lot of TA now for investing, but you'll see me using like yearly candles, monthly charts, no lower than weekly charts, because like especially for tax purposes, right? In the US, like we want to be buying stuff that's going to perform for like over a year at least, because like getting to that tax hurdle is like so important, right? It sucks if you got to pay an extra 25% in taxes or whatever your state is, probably like 30% in California, for no reason. So it's good to make sure the stuff that you're buying is being bought with like a high time frame thesis. And that's why I'm thinking ahead here to ETH. Like, when am I gonna be like, cool, like I can buy this thing and go into a coma for a few years and accumulate it for weeks or months or whatever. And to me, that's when the yearly chart could potentially turn bullish again. And I don't think the yearly chart can potentially turn bullish again until we sweep one of these lows, right? And that's like way down here. So I think accumulating somewhere in here, $400 to $800, whatever, maybe for a move back to 20K eventually, like that may still happen, right? That's something I'm thinking ahead to, but I don't. Yeah. PD Marks, adoption, TVL, Wall Street, tokenizing RWAs. Yeah, we did all that, right? We did all that, and we failed to break out. This is kind of my point, right? You guys are very familiar with like the tech adoption kind of chart, right? We have the early adopters, and you have like the hype, and then it dies off. But then like somewhere here, right? This is like kind of your news-based top on the hope of the technology. And then you have like the sort of valley of despair, and then like eventually the actual adoption comes. It's just starting though. I mean, is it like I've seen people start to do things, start to build things. Okay. So even if it is just starting, I still think it's an interesting question of whether like Ethereum captures any of the value of that. So one thing I could point to that might be interesting for you, is the DeFi ETH chart, because one of the things I'm like kind of most bullish on in crypto, and still believe is a thing, is that we've created these sort of revenue generating coins that look more like actual tech companies, and they provide a framework that eventually becomes like undeniable for TradFi capital to come into and buy. Like if there's just sustained periods of revenue generation and return of value to token holders that like starts to mimic stocks and look more attractive than stocks, and eventually if stocks keep getting bid up to the moon, some of that capital is going to come into these assets, and they're such tiny market caps that they really could go on tremendous runs, right? So in my zoomed out crypto, even though I got these clickbait titles about crypto, and I do think it does look pretty fucking grim, honestly, for the foreseeable future. With my zoomed out multi-year, multi-decade even hat, like I am still very much looking at these DeFi protocols and protocols like Hyperliquid, because I think they still could provide like incredible opportunities, especially if we go through this period where Bitcoin dumps and everything just sells off because Bitcoin is dumping, because everybody just still trades these things on like some sort of like relative valuation correlation model. But eventually I do think that breaks. I do think that breaks. And I think again, we're zooming way out here, but this could be like a decade long thing, like where people have like many months, if not years, to accumulate these things at what end up being like very, very interesting discount valuation. So to me, oops, I deleted all my stuff. To me, the DeFi ETH chart is interesting because it to me measures this question of like, is value going to the app layer or is value going to the L1, right? And ETH is the prototypical L1. And DeFi is like the prototypical app layer, right? Now, there are some symbols in this that are probably not ideal to have, right? There are some DeFi protocols that are quite frankly shit. Tokenomics are terrible. They're going to zero, right? And this would probably be better if I took the time to like bucket together. Maybe I will do that at some point. The play here would be to take all of the DeFi protocols that you would classify as like sustainably revenue generating with like decent enough tokenomics, to combine those market caps together and then to do a market cap ratio of that. Like you can kind of sum them all together in TradingView and then divide that by ETH. And that would be an interesting window into whether on a relative basis, capital is flowing into the revenue generating protocols or into the base layer, right? Now, I would say that on a multi-year time horizon, this chart is very bullish. It's very bullish. Now, you guys, if you were paying attention, you heard me talk about this 2022 bear market candle, right? This exists on every chart. And you saw me talk about how on all these coins, like the low hadn't been swept out, the low. What's interesting on the DeFi chart is that we did sweep out the low. We swept out the low of the bearish candle and we swept out the low of the prior bullish candle, right? And we closed 2023. 2023 was the year we swept and closed with a very nice candle. That's a very nice sweep candle. This is pretty bullish, right? This candle tells me that we're going here on a relative valuation, which is the opposite, as you may have noticed, of some of the other charts I've drawn out where I'm showing you things that are going to the down line, right? It's also interesting to note that this year we also did another sweep of this 2024 candle during the tariff tantrum and a retest of this 2021 low. So basically, okay, so this is gonna be a little nerdy for a second, right? There's a thing called candle science, where you're sort of doing TA just on a sort of candle by candle basis, and one of the principles of this is that you want to look for the last bullish or bearish candle, and you define that as like the last candle that closed outside the high of the previous candle, right? So this 2021 bull market, the entire DeFi bull market, was one bullish candle. All of the pain of DeFi that has been experienced over the last few years has never actually produced a valid bearish candle. There has been no bearish candle that closed below the 2021 candle, right? Which means that DeFi has been default bullish for its entire existence on a yearly basis. And all of this pain has just been chop and an attempt to put in a bearish yearly candle, but a failure to do so. So if you zoom way out on DeFi, right, way out, 12-month candles are very zoomed out. The picture is actually very rosy and, in my opinion, very bullish. It is a sort of time-based capitulatory pain because 1, 2, 3, 4 candles is 4 years of nothing happening. It's 4 years if you bought the top of the range of being down bad. It's 4 years of you trying to catch the bottom and having price go all the way back down to you. But I suspect when zoomed out that this DeFi ETH ratio goes higher and higher and higher and higher and higher. And the TLDR of what this means, I think, if you are investing in crypto with like a really long-term time horizon, is that it makes sense to me from the charts to be more focused on buying protocols than buying Ethereum. Because I think there's a very high probability that the relative market share of these protocols versus Ethereum goes kind of up only over the next 10 to 20 years. That is like my baseline assumption. And that is why in the Discord I've always talked about stuff like Curve and Uniswap and Hype, which isn't in this chart, but in my mind is the same kind of principle. And why like I keep looking at them even though they don't do anything, right? Or they just break your heart on the lower time frames. But like I actually do believe on the very high time frames that they look quite bullish. It's just like very hard to tell somebody at the beginning of the depths of the internet bubble, right? That you've got great opportunity ahead of you for the next 6 years to buy these things. Like it just looks terrible at the time, right? But in retrospect, Apple and Amazon and Microsoft, they're all very obvious, right? They're so obvious in retrospect, but at the time it looked terrible, and it looked terrible for a very, very, very long time. So that's kind of like the yearly breakdown. And then again, like I still think this looks good from a kind of trading model on the lower time frames, on the monthly, because I sort of view all of this here as sort of like a consolidation. This is like a lower time frame consolidation near range lows. And back in 2023, I think when the market started looking ahead to like this is maybe like peak Gensler panic, right? Probably a generational bottom in like crypto regulatory sentiment. And what did we do there? We put in what, in my opinion, is a manipulation leg, right? You have a consolidation, you have a move below the range lows, which looks like a very strong move, but then it's met by expansion in the opposite direction, right? And this, to get technical for you, this is a change in the state of delivery. You have a sequence of bearish order blocks, or bearish candles rather, which in aggregate make a order block. And then you close above it with one-way expansion in the opposite direction, right? And then you can kind of see that the mid-range of this, some people think that this stuff is just all random and magical and there's no rhyme or reason to it. But like you can very clearly see the mid-range of the bodies here, right? And how once we closed outside, that mid-range was respected. And then again, during the 10-10 dump, what happens? We dump into this area and it's bought up very quickly. So I believe that the 10-10 dump was the higher low for DeFi versus ETH. I don't think we are going to go back below 10-10. I hate saying this, but maybe ever on DeFi ETH. Don't ever say that in crypto. Don't ever say that. But like, I think there's a very strong chance that that was just simply a retest of that area, your second low in that area, and that we're going to just kind of go up now in DeFi versus ETH. Because ETH is a good asset at a bad price. I think some of these DeFi protocols are starting to look like good assets at good prices. I think a lot of them still got so wildly overpriced that they still can go down lower in dollar terms. But I think in terms of ETH versus DeFi, which is kind of like the relatively better priced asset, it is definitely a DeFi. It is definitely the revenue app layer of crypto. And so that's where I would be focused on if I were an investor. That's where we're primarily focused on. in the Magic Lines Discord now. Not like this week, but in a really zoomed out, like kind of, we're looking at this stuff over a long period of time. Because like, look, it does still look terrible to me in dollar terms over the short term. It does, but for a long term strategic perspective, I don't think it looks that bad. Okay, what else did I want to talk about here? Okay, so altcoins haven't been all that bad. If you guys follow me on X, you know I've been a bit of a fart coin bull for a while, and we actually took a very, very, very nice trade on a glorious fart coin asset. Kind of. These are all the annotations of the fart coin trade as I had it marked out before we took it. So from what happened with Fartcoin, right? So Fartcoin has allegedly been in the hands of the market maker Wintermute, which kind of has a bad rap for destroying coins. There's a lot of hubbub on Twitter back around end of the week of the 21st about how Wintermute basically just dumped all of their coins. And some speculation that like a lot of this was just people just like offloading these positions without regard for price and just getting out of the market. Which to me was very interesting because like that's when you want to get into things. Like if there's a large whale that just market sells his entire bag, it's an interesting point in time because who else is going to sell at that point? Like you had 1010, all the people leveraged long Fartcoin got blown to smithereens. Like what did the 1010 candle look like on this? Yeah, so it's a 1010 candle. Just this thing went to 9 cents on Bybit. These people are all freaking nuked, right? And then you have this here, which just looks like everybody dumping. So I tweeted on Twitter that around like I think like 18, 17 cents or so. Like I bought a Fartcoin bag, Fartcoin now. You know, it's starter position, not enormous size for me, but like a sizable chunk at like 17 cents because I kind of feel like there's a good chance like that was sort of like a generational bottom. Not to say that like we can't come back to that level, sweep it or retest it again in the future, who knows, but like I like this coin. I do. I think it has this like self-reinforcing hype cycle about it because once price goes up, people have to talk about it, right? Like if PopCat goes up, nobody cares, right? It's just like if there's some insiders trying to like pump PopCat, but like nobody cares about PopCat. When Fartcoin starts going up, nobody can stop talking about Fartcoin, right? And then the chatter spreads. It spreads out of crypto. It spreads into normie circles, and the next thing you know, like they're on CNBC talking about Fartcoin. Sometimes, usually, it's a segment on how stupid and terrible and bad crypto is, right? But as you know, there's no such thing as bad press, right? These are attention-based assets. It's purely an attention-based asset, so any and all attention is good. So I view this as like a reflexive attention asset. So in spite of my generalized bearishness in crypto, I mean, God, this thing does not look bad still. In spite of my generalized bearishness in crypto, when I look at Fartcoin, it's something that like I want to own and acquire, right? Like if Bitcoin goes to $40,000, like the first thing I want to buy isn't Bitcoin, it's Fartcoin. Because it's just going to go up so much more. It's going to rip so much harder. I have a very high degree of confidence. And again, clip this and make me look like a moron a year from now. But I don't know if it's over the next year or the next 2 years, but like I have a very high degree of confidence that Fartcoin outperforms Bitcoin. I do. Because Fartcoin has already speed run the whole cycle of hype and despair, and everybody blew up leverage trading it, and the last whale sold all the bags. Bitcoin still has like, everybody's still on the Bitcoin Titanic right now. Everybody's still on that ship. That ship can really sink still. Like, bad things can happen there. We could have a nuclear apocalypse at this point. Like, I don't know if Farcoin goes back below 8 or 9 cents, right? I think it's pretty it's pretty done. So I think the Fartcoin Bitcoin ratio kind of supports my thesis here. This is a pretty clean looking chart to me. Very clean chart. Range high, range low. Nice move up off range lows, slow drift back down, sweep range lows back inside the range. So, main targets, basic range principles, range quarter, mid-range, range quarter, range high. Keep in mind this is versus Bitcoin, but like this looks like 116% versus Bitcoin. To here, this is 280% versus Bitcoin. Like, I feel pretty good about this being like basically like a bottomed out asset versus Bitcoin at this point. Not to say that the Pico low is definitely 100% in, but like I really like the risk reward here, and I would way rather own this than some fucking stupid VC. Like, I don't want to own something like something like Arbitrum. To me, like, that's kind of like the worst of all worlds, right? It's like ETH in that it doesn't have revenues, but then there's like also VCs, and then there's also inflation, and it's just like, oh god, there's still a bunch of market makers in the coin. This is it's pure. It's maybe the purest asset we have left in crypto here. So we'll definitely be talking about this glorious coin more. I'll probably do some more lower time frame analysis on this and post that either in a different video or on Twitter. Now is probably not the time for it. This looks like it wants to have another leg up on Bitcoin right now. Like, this is a pretty bullish little ditty here. Tempted to make a long fart short Bitcoin pair trade right here. Tempting. Okay, so let's go back to talking about things that go up. The 2 G's, Google and gold. That's all you need to know. Buy the G's. Look, Bitcoin's supposed to be this like monetary debasement thing. That is what gold is. This is what a monetary debasement asset actually looks like when the world is fearing monetary debasement. Compare that to Bitcoin. Not great. What does the gold Bitcoin chart look like? Not great if you zoom out, but like if you zoom in, I think Peter Schiff is going to age pretty well here. Like, I could say that this is a range. Let's see what that looks like. That's pretty clean. That's a clean range. Look at that. Oh, it's so satisfying when I draw a range, and then it's just like this perfect little kiss off the mid-range. Just gives me so much validation, that this is a good range. But this is where I would worry about gold Bitcoin going, right? This is probably a pretty big move. What is this? This is 120%. Is there a world where gold goes to 20K and then like Bitcoin goes down or goes flat or something? Maybe. This is 280% to the top of the range, right? Again, gold versus Bitcoin. I'm guessing everybody listening to this stream probably has too much Bitcoin and not enough gold, right? So I think my main takeaway here would be to buy more gold and have less Bitcoin. don't sell it all. Don't do that. Just because one guy drew a line on YouTube, please don't sell all of your Bitcoin and come hunt me down and kill me in 25 years when it's $10 million a coin. Don't do that. But like, I think you guys are probably all underexposed to gold. I mean, these last few years, it's just been like just complete revenge of the boomers. It's not even revenge of the boomers. They're just like always winning. They're just always winning. The stocks have killed us. Gold is going up. Uh, we're fools. We're fools, man. Anyway, gold, Bitcoin, bullish, bullish AF, in my opinion. If you're like, Steven, I get gold is bullish, but like what do it just doesn't go up that much. I mean, it's kind of going up a lot. Look, if you're a degenerate, buy gold futures, like whatever, like lever up with futures, buy GLD leaps, buy options. The other interesting play that I'm looking at, I'm going to give more details on this trade in the Discord this week. Probably one of my higher conviction ideas lately. This is GDX. This is VanEck Gold Miners. Holy shit, look at that yearly candle. This is like so bullish. This is like so bullish. This is one of the most hated assets in the world, gold miners. Like this has been like a widowmaker trade for like every time people think it's going to go up, it just doesn't. It just looks terrible. Actually been in a pretty freaking clean uptrend here since 2015. This is a pretty clean uptrend, and whoop. So GDX is kind of a more degen gold play. GDX was up 16% last month. Not bad. If you wanted to get more degen on this play, you could probably do GDX calls, GDX options, right? If it's not enough for you to make 16% in a month, you need more. You need more juice. You're a real addict like me. Probably GDX calls. I think that's something I'm going to put on. I'm not exactly sure the level I want to buy this yet, or what kind of stops I want to use, or what exact options contract I want to use. I'm gonna think that over. I'm gonna probably write that up in a report in the Discord this week. But yeah, I'm bullish. If you guys want to know that. So another example of a chart that goes up and a chart that doesn't bring you infinite pain like crypto. So one more, maybe a couple more notes here. If we go back into crypto land, there's a lot of charts that are just kind of similar on these yearly candles. XRP is another one of them. XRP, everybody is pointing out as like, oh, it's like so bullish. It's so bullish. It's holding above support. One of the most bullish coins this year. And that's been kind of true, but like, let's see where we close out this yearly candle. But if it looks like this, the baseline assumption is some sort of wick up next year, and then we go for the low. So this could be a pretty insane short at some point. I'm thinking that this is going to end up being like an insane short. This is just air. Like maybe we just take that out. I don't know. But like it'd be a hell of a move if we get a little pump up into here and take it down. 80 some odd % on a short. Not a bad trade. Always a little sketchy shorting altcoins because they can rip your face off. But I think XRP is probably cooked. I would describe it as pre-cooked right now. Like I don't know that it is a fully confirmed short. I would not classify it as a buy or like a long at the moment. Still could rip your face off on a short, but like this is something I'm looking at that's probably going to go to zero, I think. And we're also currently short Pepe right now, which is just the embodiment of all the stupidity we live through. Pepe is just a giant freaking head and shoulders. Looks a little easier to see, less dramatic on the log chart, but this is still a big move down, right? This is still 80% to take out the lows of this zone. I think there's a lot of stuff that just looks like this right now. The memes kind of look the most cooked, but I think this is going to start spreading into some other stuff shortly. None of this is to say that like we can't have some nice runs. This was a little bit of a pain. If you got short down here, you ripped, saw 20% in your face and just like a couple days, which if you're on leverage is very dicey. But I think I think it's over. I think it's over for this coin and all coins in this basket, except Farcoin. Farcoin is already down here. Farcoin already went down here. It already died. It's already over. The meme value is better on Fartcoin. The reflexivity is better on Fartcoin. So maybe that's an interesting trade. Long Fartcoin, short Pepe. Idea? Oh, love it. All right. It's the trade of the week, boys. Long fart, short Pepe. It's pretty clean. That's a bit of a wide stop, though. I might like do this. I might be like, yeah, generational lows in right there. This morning's low. Send it. Risk 1 or 2%. All right, I'm gonna wrap it soon. So let me see if I just had any questions that I missed out on. Hope you guys enjoyed the stream this morning. It's a bit of a lengthy one, I guess. I don't know how long we've been going for here, but yeah, okay. So we got somebody tagged me. Mike, oh, you tell me that Mike died. Yeah, sorry about that. What about just long fart? No, sure. Yeah, I think long fart is like, I have to look at the fart USD chart a little more detail for the perp trade. I think it's fine as like a longer time frame. Like you buy it here, you buy it lower, you have some patience. Could be a little more precise with the leverage. I don't know that Fartcoin is going to outperform in USD terms if Bitcoin goes to 40K, but it is like really interesting on like a spread trade basis. Like I think it's really interesting. So I'm probably gonna put something on there. Anyway, thanks guys for watching. Please be sure to subscribe and like if you haven't already. Check out the links below. We get the free Discord, we get the premium Discord. Follow me on X, all the things. It's good to be back. It's good to be rested. Feeling good about stuff, even though it looks ugly in crypto right now. There are still markets that look good. There's still ways to make money. It's not all so bad. We're going to be okay. Life is electric, bro. Anyway, I'll see you guys next week. Have a good day.